Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be focusing on a supply and demand block that you probably were not aware of, which is a very good area to be doing business at. I'm going to explain you how to spot these in the charts, what to look for, what they mean, why they happen, and ultimately why price is going to be magnetized towards those areas. Just to give you a little bit of rundown on what's currently been happening in the markets, I'm currently looking at gold on the 1 hour time frame, and this level over here, 1615 flat, is a level that I had denoted in my market mapping session, which I do every single week for members in the community. So just wanted to share that. I was able to capture a buy as a risk entry within that block based on the key level, which is once again part of a higher time frame area, which we can see to the right. This is an IFC structure for those of you who are not familiar with that. It's below a very visible liquidity pool, so therefore this was a high probability for price to go bullish, especially as it trades below a swing, which once again initiates shorts and stop longs. So it was a beautiful trade that I ended up closing over here. First target was obviously the Asian pool. Once again, my stop loss was not here. Just ignore the fact of the stop loss down there. My first target was over here, collapsed right over here on the FU on the left, which ended up playing out for roughly 370 pips. But that's a topic for a different video. Let's go back to what we're actually going to be doing today, which is the explanation of the hidden supply and demand block that you did not know. So if this sounds like something you want to learn today, guys, make sure you stick to the entire video, because once again, I'm going to be trying my best to provide you with valuable knowledge and information that's going to serve you very well when navigating through the financial markets. So let's get started with today's lesson. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including Forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for Forex pairs on ECN Plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video, and now into today's lesson. Enjoy the video. So traders, here we are on the drawing board, and as I said before, we're going to be talking about a specific supply and demand area, which is very, very powerful, as you will find that price is often going to be magnetized towards that area, and is going to be the last area of supply and demand pre-break. Okay, this is a specific concept that I do use in my trading, which allows for a very specific POI. And now we're going to be going through what is it, when does it form, what does it mean, how to spot it on the charts, and how to trade it. Okay, I'm going to be essentially covering the full depth of it. So let's get started over here. We're going to start with a very, very basic example, because I think it's going to be easier that way. So let's say, guys, we have a market that's consolidating like this, right? At this point in time, we can all agree that this market is consolidating, right? We can see that we did have a spike down, cleared liquidity. That, by the way, should indicate you that we're probably going to move this way. Nonetheless, that's not what I want to focus on. I want to focus on the fact that we do have a range in market, okay? And let's say this range in market goes ahead and actually ends up breaking up off the consolidation, moves up for a undetermined amount of time, and never come back to the consolidation. Okay, the very first thing that you need to understand here is that obviously this area on itself is an order block. Okay, however, you have to understand that there are different refinements and areas within the area. As an example, this section over here of the block, which is still part of the overall order block, is your origin block. Okay, something that I've told for a year now, which is very, very powerful, as orders are likely to be waiting here to be filled. So once again, if price were to drop down, we would more often than not see a reaction over there. It's not to say that price will make a new higher high, but it's to say that we're probably going to see some sort of reaction coming from this area on the left. But once again, talking about the specific area, which is the last area of supply and demand, the very first rule that I need you to understand in order to get the full understanding of this concept is that happens after a breakout in consolidation. Okay, this is your first rule to understanding this specific type of POI. And what you need to do in this case is actually go and read the order flow. So we're going to be doing a little bit of that exercise right now. Okay, so with that in mind, if we were to track the order flow, which we're going to do in green, you will identify, right, that we had order flow being delivered sideways, range in market, spike down through the lows, probably clearing liquidity, back in the range, order flow, order flow, order flow, order flow, mitigation, consolidation, eventually breakout. Okay, so the area that I'm talking about is the last area pre-breakout, okay, which once again, as the name says, it's the last block pre-breakout. It's the pause before the break. Okay, so let's say as an example, you do have a bullish order block sitting here, right? Which is once again in this case the last block or area pre-breakout. So this would be considered the strong area that we're talking about today. In this example, and do not worry, we're going to do a bearish example in a second, just to clarify, just bear with me here. This would be considered the last area of supply and demand, which once again is the pause in the market before the significant break in consolidation. Okay, you need a visible consolidation for this area to make sense, okay, for you to actually have a last area of supply and demand. Once again, let me repeat it. It is the last pause before the breakout, okay? So over here, we are below the breakout of the consolidation, right? We're still respecting it. Here is where we break. So once again, the last, you have to then track price down and follow it and look for the last order block that formed before the break or as we break, okay, because that's going to be a very strong area that price is going to be magnetized to it. I'm going to show you a trade example that I took, that I shared with my group using this very exact same concept. Okay, so just to follow up on what we're discussing, let me get my writing tool over here. Monitor order flow to track the block, last pause before significant consolidation break. Okay, so the order block that forms right before the break, it is the last pause that the market makes before the break, is considered the last area of supply and demand. And it's actually very, very logical when you really think through it, because you have to understand that that block that formed, right, which is going to be once again a bearish candle followed by a bullish candle, which forms your order block, right? This, you have to understand that this is the last chance sellers had, right, in this particular market to avoid us breaking out from the sideways range, which you can see over there. So it is very, very simple. Nonetheless, requires a little bit of focus, as I said, and it will be much clearer as I go through a bearish example and we work through it one more time. But at this point, you should understand that you are only looking for this block at visible consolidation areas, and in order to get it, you're tracking the last pause that the market makes before the breakout occurs. Okay, this is your breakout candle. This is the last pause, which is a move in the opposite direction. And you will see that what really happens over here is that price tries to mitigate supply. I know it's difficult to see, but this swing high to the low, this edge over here is the last supply. Therefore, you get some sort of bearish price action, which ends up forming the bullish order block. Okay, it's all a sequence, but it's very, very straightforward. Once again, it is exactly the point where supply, in this case, right, because the supply is over here on top, fails to hold demand. So let me actually write this for you guys over here. Last point where supply fails to hold demand in a bearish example. Obviously, it would be the exact same opposite. Sorry, for a bullish example, it would be the exact same opposite for a bearish example. We're gonna be going through that right now. But at this point, this should be very simple to understand. You're looking for the last pause in the market before the breakout occurs, okay? And you're looking for space. You don't want it to immediately mitigate the block. You're looking for space in between the breakout and the return to the area. Okay, as price returns here, you will find that liquidity is probably going to be engineered on the way down. We're going to grab that liquidity into the last area of supply and demand pre-break, and then we're likely to bounce. Okay, if you have a higher time frame bias, you can expect it to make new higher highs, whatever your trade system says. But once again, we're not saying that price is going to run up to the highs. We're expecting a bounce, okay? And that bounce could lead into some previous lows that we're then gonna tap and move further down maybe and look for the origin, right? Or maybe even clear the origin, okay? So this should have been a very, very good example. What I'm gonna do now is delete this and go through a bearish example rather quickly. After that, we're gonna be going through some chart examples of this specific block being outlined, and going through the GJ buy position that I took based on this very, very same concept. Okay, so let's actually go ahead and do that. Let's draw a bearish example over here. So bearish example, once again, it starts with the very same story. You're looking for a consolidation, a sideways range in market, and it doesn't need to be perfect like this. It could be a lot more different and still be a valid sideways, right? You could have more swings up and downs, but overall we're not really moving in any direction. We're staying within this range. Therefore, this becomes your trading range and you're looking for a break, right? So let's say price happened to break down over here. What would be the last area of supply and demand pre-break? Okay, you have to think about the last point where demand fails, because we're looking at a bearish example. Demand fails to hold supply and supply takes over. Okay, and as you can see, if we connect the dots, you see that we try to hold demand over here. We do that for a limited amount of time and then we break down, right? We then clear the range. So in this particular case, guys, you will see that let's do this. So a order block is gonna form right over here. Let's choose red once again, as this represents the breakout candle, and this is once again the last area of supply and demand pre-break, because it happens before the break. You're looking for the last order block before we break out of the range. So we can drag that across, and we now understand that this is the area we're looking for to sell over here. Okay, because we've confirmed price below the range, we have space in between, which I said is very important. You're not looking for an immediate test of the supply to go down. You are anticipating space in between, and if you get that, you know that as price makes its way up here, there's going to be a very high probability that we're going to see some sort of bounce, okay? As I said, it doesn't have to make new lower lows. It would be ideal on a bearish market, but you're looking for a significant reaction or bounce at the area. So once again, it is the point where, in this case, demand, which is sitting right here, fails to hold supply, which actually takes over and breaks out of the range, okay? I will say that you do have to pair it with everything else that you know, such as ATR, which I've talked about extensively in previous uploads, timing, and things of that nature. It is essentially a very strong area where price is going to be magnetized into. Okay, so I do hope that this explanation makes sense. I did try my best to provide you with the easiest and more sensible information, but at this point you should be able to understand what the last area of supply or demand pre-break really is. Okay, it is just the last pause the market makes before the significant consolidation break, and you will find more often than not um, that if you read the order flow, right, it confirms that idea, because price will have mitigated here, and what should have happened is that we should have bounced to the upside again, right, based on this demand zone, but it did not happen. It actually consolidated, formed a bearish order block, and broke down lower. So we know that as price makes its way up here, we're going to expect a reaction to go further down. So with all that being said, if you're still a little bit confused with it, you don't need to worry, because we're going to be going through some chart examples and a trade example as well, so it should be a lot more clearer by then. So let me quickly pause the recording. We're going to be jumping right back into the charts, and we're going to be going through the chart examples. All right, traders, so here we are back on the charts, and as we said, for this last segment of the video, we're going to be going through my GJ example using this very same concept. Okay, so let's start going through what I've just taught to you guys. Very simple, guys. Let's go back over here. Let's grab this tool, and we should all agree that this is a market that's in consolidation, right? We're not really moving down. Whoops, let me actually do this. We're not really moving forward down. We're essentially consolidating, moving up and down, not really breaking above any significant structure, just moving sideways, which is absolutely fine, right? You will see that it happens quite often in the markets. It's just a phase that markets go through. You're not always going to have impulsive moves. You're not always going to have clear retracements, so that's why it's important to know what market phase you're in when you're actually trading. But once again, topic for a different video. At the same time, do not get confused by the drawings on the right, because this is something that I'm looking at on the present time, and we're talking about a trade that I actually took in the past, which I shared with members in my community. Okay, so this is the consolidation. Now when we talk about looking for the break, right, we can argue that the break happens over here, right? You can see a significant displacement higher. This is where we start to move up, and you can see we don't immediately come back into the consolidation and move further up. Otherwise, this concept would not have been valid in this particular scenario, but rather we move up and we extend that up move, right? We can see that we then pause for a bit here and move further up. Okay, right? So this is your overall consolidation right over here from high to low. This is your breakout. And now you're looking for the last pause in the market before the break occurs, okay? So in this particular scenario, I think I did that based off the 1 hour. We can very clearly see, right, that this particular consolidation area right over here, because once again you will find consolidations within consolidations, okay, as I'm showing to you guys here. You have to make a subjective decision and determine yourself which consolidation you're looking for the breakout. So I remember that specifically in this particular scenario, I was looking for a break of this consolidation over here, and we get that exactly over here. This is the last pause that the market makes before we significantly displace higher. So therefore, this becomes the last supply, well, in this case, demand pre-breakout. Okay, so there is your POI outlined over there. We went through the concepts that I've taught you guys, and yeah, we're just applying what I've said. It happens after the breakout. You have to monitor order flow, because if we look at this rather closely, we can see that we move down, mitigate here. One could argue that at this point supply was in control, but here we mitigate quickly. You can see the wick, which represents the mitigation, move tiny bit away, and then we break out over here. And we can see that this is the last order block, the last pause, the last bearish candle we get as we break out of the sideways range. So this is the powerful POI that I wanted to share with you guys today. That is the area, and for that reason is why I actually managed to capture a beautiful long on GJ based on this POI, which once again, it is right above the breakout of the range. We can see that we easily manipulate the lows, so that should signify you once again that the highs are up next. The manipulation of this low means actually a mitigation of the origin over there. Once again, if you draw the entire block, you will see that we hit the block, clearing equal lows, manipulating the range lows, moving up, breaking out, forming the last demand pre-breakout. Okay, so as price then returns back into the area, we're doing that with space, which is what I taught you guys, right? We can see that this block remains untested until we move back down over here, right? We move back down over there, and we move up. So in this particular day, I do remember very specifically that this was ATR low for the day. This level over here, right where it hit. So that's an extra added confluence into believing that we should bounce over here. Okay, so you're not blindly just taking entries left, right, and center. You're pairing your knowledge with everything else that you know about the markets from a technical point of view, such as timing, structure, ATR, things of that nature. So I actually, and this was shared with members in the community, they do know that because I remember very specifically sharing that, I took a buy position right over here, somewhere in the wick. It was actually a pretty phenomenal entry with minimal drawdown. So let's readjust this area over here. Let's grab my stop loss was obviously below the block low. And I'm sorry, I'm trying to not move the drawings too much, just to keep it simple. And my idea was to target there, okay? Because I did not have any reason to believe that we're now going to be making new higher highs, okay? I was looking at this low, at this breaker over here as a target area. I did end up closing earlier than that, being Friday, and being very happy with my results for the week, and just booking, I believe it was 250, something like that on this particular push. But we end up moving a lot higher, and I was looking to target initially over there. So this is a very simple trade. As you can see, you don't need 1 to 100 risk to reward to have positive trades. You just need to make positive executions with very well defined risk and very well defined target areas. So this is everything that I wanted to go through in this video. I think this should function as a very good education video. I do not think anyone else talks about this anywhere else, so I would appreciate if you could actually share the video, drop a like, drop a comment if you enjoyed, and drop video suggestions as well, right? So just to briefly summarize what we went through today, let's actually go ahead and do that rather quickly. So we have the concept of the last supply demand breakout. Needs consolidation, just very quickly. Last pause as we break or before the break, both things are valid. Point where supply or demand fails to hold and the other side takes over. what else do we need? We need to monitor the order flow to get it, and you need to pair it with ATR and everything else that you know. Okay, so once again, I hope you enjoyed the video. I did try my best to be clear with everything, and I would appreciate if you actually dropped a like. So with all that being said, guys, thank you very much for listening. If you made it to the entire video, I appreciate you a lot. The sponsor of this video, you will find the link in the description below, and I'll talk to you guys very, very soon. Take care, everybody. Thank you for listening.